Greetings traders, this is Houston Trung from thetradingash.org, and here is your market outlook for April the 12th to the 16th, 2021. So another week of trading in the books and some fresh highs for the SPY and new all-time highs for the Dow. Question is now will the Qs play some catch up, and will the Russell, which has kind of been lagging, begin to play catch up? Aside from that, the markets, even though they're hitting all-time highs, the volatility has been melting. So we've been on top of this for a while now, and the reality is that the markets are slowly, and we see the VIX melting down, and the markets are basically melting up. They're just, I guess maybe melting is too strong of a word. It's a drift up right now, but I imagine that if the Qs begin to play catch up, we could see this rally really start to melt up. As I said in last week's video, maybe even the week prior, is I think the risk for the market now is that we melt up significantly, and this possibly sets up for a bigger pullback, let's say in a couple of weeks or maybe a month's time. But for now, let's focus on the coming week. We have a fairly slow econ calendar, your usual, econ news items on the calendar. So watch for those, like the jobless claims number on Thursday, CPI, of course, on I think it says is it Wednesday? I believe it's CPI is on Wednesday, right? Yeah, CPI on Tuesday, and then we have earnings for the banks coming out this week. So we have the big banks coming out with their earnings, and that's something to watch out for, because the question now is, when will those banks begin to announce their share buybacks? And that could cause a second leg up for many financial names, which are still, even though they've had a huge rally, probably still under-owned by a lot of traders and investors. So let's get to the charts. Enough pontification. Let's get into the assets that we typically watch. So as we always do, we begin with the Vix chart. And what can you say, man? The Vix has just been melting, and this is basically is a follow-through of this Momo down sequence we've seen starting here in February. Momo down in the past couple months. We're just melting to the downside here, and Vix, the VXX now is trading at historical lows. This thing will have to reverse split, as I typically mention, and the VIX itself, the VIX index itself, is getting close to now these 2020 levels. So we're still in double digits, 16.7, which is still fairly elevated, but the trading, as if you've noticed this past week, was very, very muted. So we had extremely low levels of volume this past week. The ranges are very, very tight, and yeah, it just seemed like the market was asleep. It felt like it was already summer trading. So if anyone was trading, if you traded back in 2017, 2018, it was basically a very sleepy time for the markets, right? You were better off just basically swing trading or finding, some good core names and getting along them and staying along them, because the market at that time was just basically rewarding overnight risk. You'd oftentimes get gaps during the overnight session, and the actual intraday trading itself was pretty slim pickings. I remember, trading in 2017, 2018, and if a stock would gap up 3%, you'd be ecstatic. This is a far cry from, trading back, back in the halcyon days of this year. We have stocks gapping up, 10, 15, 20%. So those days may be in our rearview mirror now. As we begin to approach the low teens of the VIX, expect to see these large intraday moves begin to dissipate, and this means that the trading season, what traders like is volatility. The opportunities begin to disappear as we get into these slower markets. That's when swing trading becomes a lot more profitable than trying to fight it out in these short-term time frames with low levels of liquidity. At that point, you have to wonder, once you start getting back to these low teens in terms of the VIX, what is even the point of trading equities when you have a roaring bull market in cryptos, where you have 20% plus gains in a single session? You have to again begin to scratch your head and figure out, well, why am I spending all my time focusing on stuff that doesn't move when you can go over to cryptos, and the risk to reward, the profiles there are extraordinary, right? And I think a lot of smart minds now have made that or are making that move over to the crypto space, because if you just compare the gains, it's not even an apples to apples comparison there. So VIX, as we know, let's go back to the point at hand, the VIX chart. VXX, Momo down, the monthly, that's just going down, it's melting. It's an outside inside down the weekly, and so long as this thing keeps doing this, right, it's basically doing a Bollinger Band walk now on the weekly chart. That's what we're watching for, right? So for all intents and purposes, this trend will continue to go down until you break above a prior week's high. So we started the Bollinger Band walk there because we closed below the Bollinger Band. So it went there 2-3 weeks now, inside below the Bollinger Band. So until you can break above a prior week's high, the trend is actually very, very strong to the downside. So you cannot say that, some people see the Bollinger Bands, if you don't understand them properly, if you interpret them wrongly, people think that if it touches the Bollinger Band, then it's oversold. That's too simplistic, right? What we're actually seeing here is that markets can get stretched and stay stretched even for long periods of time, so long as the sellers continue to appear. And right now, the sellers keep showing up, they keep selling the VIX. So at this point here, until you get a break above this high, you want to be short biased on the VIX. That means long of equities. Even if it does pop up, right, we still have a lot of time frames working against the VIX. So you're still trading below the monthly open, below the quarterly open. So until you can break above there and then crack above that monthly quarterly open, no reason to get long VIX for any sustained period of time. Okay, so on the daily chart here, this is something interesting. If you've been watching these videos for a time now, I drew this pattern formation a while back. So this, I'm bringing to your attention to this yellow formation here, that big broadening formation. I drew this thing way back. I'm gonna move my I'm gonna move my charts here. I drew it way back here. So that's actually making it a little worse. So I drew it back here. So this was back in September time frame. We drew it back 2020. So we had that high, we had that higher high, then we had a low which is lower than that pivot low there. So we've drawn out this broadening formation, and this thing has done a very, very good job at holding that trend and watching to see where the price can bounce and where it can go further. So you can see here the trend line is sustaining itself, and you can see clearly that there's possibly more downside available on the VIX here as it continues to make its way down this trend line, right? So you can clearly see now it's slowly melting down the trend line. At some point it might bounce, but for now, again, we're watching for is that weekly prior week's high. Okay, so VIX now continue to stay on the short side. No reason to be making long bets on the VIX, and if you are making long bets, then you need to see price break above and stay above the monthly and quarterly open before it really opens the buy gates. So outside bar to end the day on Friday. Okay, on Monday you want to watch and see, does it go outside bar up, and then if it all of a sudden goes outside bar up and then back down again, that would be a Momo up reversal short. You can pretty much expect it to come back in the lows again and perhaps get some fresh lows. So that's now, as we always do, let's contrast that with our SPY chart. And SPY, as I mentioned in the beginning, all-time highs, right? So congrats, SPY holders, folks who have it in your RSP or retirement accounts. If you didn't touch SPY, and once again, it never pays to sell the SPY, right? Like if you panic and you get sold back in, 2008, which is way back here, right? That ended up being just a blip on the big time frame, right? That's a big broadening formation. You sold down here, and of course, it's ever since then. These have all been small blips that have been bought up. And you can see we're playing out a bigger broadening formation here now, or another broadening formation here now. But yeah, at this point here, we're going right in the highs, and just like the VIX chart, how high can it go? It all depends on how far and how many new buyers continue to press it. So at this point here, we've had 6 consecutive higher highs. That's six consecutive months of higher highs. See, 1, 2, 3, 4, 5, 6. That's half a year, right? So it's been exceptionally strong. This is why I called last week's video a raging bull market, because even though the market the tempo is fairly slow, the SPY still eked out 2.72% for the week. So for the year, what are we up? We're up a nice 10% already, and it's we just began Q2. So you can see now, on the yearly chart, it's Momo up. Right, so the momentum is up on the yearly chart. So clearly we have strength there on the monthly chart. And the weekly chart now, as I said a few weeks ago, We have that up and down reversal, and then once you pop back up here again, you're going to take out that pivot high, and they push it now. Now we're in the Bollinger Bands, right? So now we're right in the highs, and now you got to now wait and see how far things can get stretched if the buyers continue to push it. It's very tempting to get short here, but this is the place where it's dangerous because things can really melt up here if the buyers really push and people start to chase. That's when markets can get very stretched, and then that puts that scenario in place where we potentially have a steeper pullback if price gets too stretched to the upside. So what I'm watching for this this coming week here is I'm watching the this indicator that I often show here on the videos, and that's the S1 the S1FI chart. So that's the number of S&P 100 stocks currently trading above their 50-day moving average. There's the S1FI, so that's the number of S&P, as I said already, S&P 100 stocks above their 50-day. You can also look at the number of stocks above the 200-day, above their 20-day, above their 10-day. To me, I like this market breadth indicator. I do watch the 50-day a lot, so I think it's significant. And right now, look at the reading we got this past week. So on Thursday, we had a reading of, let me just expand this here so I can see the reading. He had a reading of 92.07%. So 92 out of 100 S&P 100 stocks were trading above that 50-day. So you can see that we've hit all-time highs, and at this point here, what is bullish about this is that even though that's a very, very high reading, it's not enough to take action on it yet, because what you're looking for when you look at a market breadth indicator like this is you're watching to see if and when a negative divergence appears. That is, you're looking to see price continue to go higher and perhaps to begin to see lower indicator readings. So that means the blue line stops making higher highs and it actually begins to make lower highs while the index itself makes higher highs. That simply means that the underlying stocks, fewer and fewer underlying stocks, are making fresh highs while the indices are pushing higher. And that's when it can set up a negative divergence, and that's when you can begin to look for stronger pullbacks. We've seen that a number of times in the past, and I've alluded them to a few of them when I brought them up, right? Like here's an example. I'll just draw this negative divergence pattern here. You can see a very high reading here, and then as the markets climbed upwards, we did not get subsequent higher readings. And then finally, this is September 2020, we had that big pullback there, right? And so that's what you're looking for when you're looking at an indicator like this, is you're looking for negative divergence. So for this week, I'm just bringing it to your attention now that we're hitting a very high reading for the S1FI indicator, but it's not time yet to take action. Ideally, what you're waiting for, if you're going to use this indicator to watch market breadth, is you're looking for perhaps a pullback on the indices that'll scare some people out. Buyers will step back in again, create a higher high, but if this blue line doesn't make a higher high to go alongside it, that's when you start to getting wary to see perhaps that there may be a larger reversal setting up. And then of course we're going to align that with our time frames, with our our monthly, quarterly, weekly opens, and we'll look at the price action, and that will then set up a potentially very good short scenario. But right now, something to simply observe, make note of, but not yet time to take action on. We'll revisit this at a later time. Okay, back to the SPY. So to conclude with the SPY, man, we're going all-time highs, right? It's we said that on the weekly charts, it's doing the Bollinger Band walk on the weekly, and check it out on the 2-day. It's Momo up. So look, Momo up 1, 2, 3, 4, 5. That's 5 2-day bars of higher highs. That's 10 full trading days of higher highs there. So it's very, very, very strong, going right in the highs here, and let's see how far things get stretched to the upside. Qs, will they play catch up? I've been saying this is a chance now for the Qs to catch up with the pullback, or excuse me, with the strength in bonds, as I said a couple weeks ago when I said all eyes on bonds. If the bonds could rally a bit, that was going to take some of the selling pressure off the Qs, and that's exactly what happened. So as we know, markets like to rally on the back of broken trades and traders, and we got that, right? So Archegos or the fund that no one can pronounce, when they blew up, guess what? The indices did not, and that's very meaningful, because if there was going to be another shoe to drop, you would have seen that reflected in the price action of the indices. The fact the indices have held up so strong, and that we're getting higher highs, anyone who's calling are saying or speculating that there's excessive leverage in the system, you're not seeing it, right? So they're missing something in their speculation there, in their theories, because the markets right now are discounting that. They're not seeing it whatsoever. Q's very hot, close to those all-time highs. All-time high right there, 338.19. We closed at 337.11, a little bit more than a buck away from those all-time highs. I'm pretty sure we get it very, very soon. So on the weekly chart, what do we got? Remember back here when I called for the Momo down reversal back to the upside? It's Momo down, inside bar, stalemate. Here they played a bit of backfilling and a bit of back and forth that tricked some people to get short again. They bought it right back, and guess what? That's the pivot they're going after, the all-time highs, because that would be your Momo down reversal. That's an outside bar. Yep, they're gonna go back to those all-time highs because they know the stops are right there. Anyone who got short, right? Let's pretend you nailed the short. You got short on the high tick, right? Back on the that week of February 16th. You nailed the short to the downside. If you didn't cover down here somewhere, you're still holding short. Where are you gonna put your stop? All right? You're gonna put your stop somewhere above here. If not, you're gonna get squeezed. You have to really worry now that they don't take out your stop or you don't break above this week's high, because once you get all-time highs, it's blue sky, and at that point you don't know how far things can go, and that's if you're short, that's how you can really get squeezed. So we're gonna draw our ranges as we always do and see this coming week where price transacts in relation to that range. Okay, so let's go here, outside bar to end the day on Friday. That's an outside bar, right at this is the weekly high. Okay, so on Monday or Tuesday, let's pretend it breaks the upside and you don't break below that low. That's a Momo up situation. As we know already, if it goes Momo up on the daily, look, it's in the Bollinger Bands, that's a Bollinger Band walk. If it goes Momo up on the daily, you're gonna have it in the upper ends of that Bollinger Band. On the weekly chart, again, this is a classic melt up here where you have to watch out now, where people could get bad trade location if they become chasing it, right? You're gonna get those breakout traders, as they typically show up right at highs. They're gonna buy the breakout, and they may be right for a little while. This thing may go higher, but guess what? The further and further you chase price, the worse and worse your trade location, and it doesn't take much to, again, stop out those weak longs, because they're gonna have poor trade location, and price is gonna do one of those whoops like that, where everything looks good, right? Because it's going into highs, until one bar just basically collapses the whole thing. So we saw that happen, with Qs here, right? So everything was good, right? Went Momo up, then all it takes is one bar like that, then you get second bar like that, and then anyone who got long in this sequence gets stopped out. We've seen this play out many, many times, and it's so funny how people seem to forget how price action works. But anytime you get that Momo up sequence and you don't pay attention, look, here's another example. The market simply repeats and repeats and repeats. You get that Momo up. Well, this is a bit different because it actually broke the Momo up condition here, but quickly broke back above the Bollinger Band highs again. And look, there, here, everyone's gone, right? So there's the outside bar. They get stopped out. So this is just again, just the way price action works, as people get carried out on stretchers when they chase price. So there's your Qs, expecting all-time highs to hit very, very soon on the Qs. Dow, let's go to that one. All-time highs on the Dow chart. Congrats Dow holders. Momo down here on the monthly chart. Went Momo down, a reversal, and now 1, 2, 3, 4, 5, 6 consecutive months of higher highs on the Dow, and we're in the upper end of the Bollinger Bands, right? So there we go. So this past week, I was saying in last week's video, you're at the top in that Bollinger Band. It would not be unusual, given how small that bar was, to see a pullback here and maybe come back to a moving average. The fact is, it didn't do that. We had the monthly and quarterly open right there, and the buyers bought it back. They gapped it up, actually. That means they squeezed the shorts. They didn't give them a chance even to backfill. So if you're holding a short last week, the market's gapped against you and you got squeezed, right? It never feels good to be squeezed like that, and didn't come back. So if that's so, you got short somewhere in here thinking, all right, that's the high. This is the lower high than that low, so maybe it's going to break down. Well, this week, you're underwater right now. It hasn't come back to let you out on a graceful exit yet. So at this point here, in that Bollinger Band, we're watching, just like the rest of the indices, how far that Bollinger Band walk can take things. All right. So right now, 3 consecutive weeks of higher highs on the Dow. Russell. So this is the laggard, right? So this is the real laggard, and it doesn't look like it's catching up necessarily anytime soon. And the reason I say that is just because of this situation here. Although again, I could be wrong. If the buyers really step up, we'll see it right away. The reason I say it's kind of stuck right now is because look how big that bar was for the month of March. Okay, so that was a big range here for March, and right now you're firmly inside bar. So inside bar in the month of April so far, lots of month left, but you're right at the monthly, right at the quarterly open. That means so far, there's no love for the Russell. It's done nothing. It's up 75 basis points, right? And we're going into the third week of trading here. The second full week of trading for the indices, but again, we're going into the 12th of April on Monday, and we still haven't gone anywhere for the Russell. So for now, the Russell this week tried to do its thing, right? But they gapped up on the Monday, but they faded it. So it's an inside bar up. So that's still fairly bullish, unless they break below this week's lows. That would cause the inside bar reversal to the downside with full time frame alignment. So this is what I'm watching for Russell. If it breaks below there this coming week, then you have to watch out, because then that would be the easier trade would be the short side at that point. All right, so that would be the easier trade to be short, given that the month would look red, the quarter would look red. So that means the Russell, if it breaks below this past week's lows, the bias would be the short side in the Russell, which would be maybe sort of a red flag for the rest of the indices. So something to watch for there. That's definitely the lagging index right now. So watch for that on the Russell this coming week. Let's go to emerging markets. That's also been a fairly market that's kind of gone nowhere in the past couple weeks. It's just been a lot of chop. So far for the month of April, inside month. Okay, so you went shooting star up on March. You repaired the trend a little bit, but that's still a solid red month. Although it's only down 73 basis points for the month of March, so they definitely repaired it a bit. But that's not a bullish bar by any stretch of the imagination there. And now you're sitting inside there. So that's the question is, how do you get outside this past month's range? So right now the bias to the downside, because it's just you're seeing a red quarter, red month there, and this coming week. So you did an inside bar down, reversal to the upside. So inside bar reversal. Okay, so this is a reversal. If it comes, they're trying to take out that pivot. Okay, so the pivot there is 54.66. It came close, 54.60. Okay, that's how close it came. So long as this bar here, so this is this is similar to what I shared on Bitcoin. So this past week I shared a video on Bitcoin. I don't know if you saw the video. I posted it on BitClout, which is the new social media platform that runs on crypto. But I shared a video of my analysis on Bitcoin on that platform, as well as on TradingView. But anyways, I'll talk about that shortly. But this is what I was looking for, because once you do inside bar reversal here, you do not want to see two levels taken out. First, you do not want to see this low get taken out. If this low gets taken out, that means the buyers who bought this immediate dip are in trouble. And then you cannot see that low get taken out. If that low gets taken out, that's the last line in the sand for these dip buyers. And if that breaks, then it's watch out to the downside, because that pattern will have been invalidated. But for now, because you're still trading inside of this bar, this is all inside bar action. Now, again, I've been saying it for the last few weeks now to help people, because I think people are getting maybe it's hard for people to see. But if you can't see it, you can see all the overlapping bars here. Right, so that is just a clue for you that if you go on a different time frame, that's going to be an inside bar somewhere. Right, so there's your inside bar on the emerging markets chart. So what do you see here now? Right, it's a Momo down situation that is now a inside bar. That means the sellers, they tried to push it as far as they could. Guess where they got? Guess where they ran out of juice? Off that quarterly open, that blue line. Now we got a stalemate. So if the buyers can step up, take out this high, and on the weekly chart, go back there again, it's already done it, right? So it already took out the pivot. So long as you don't you don't break below these lows, and you keep getting higher lows, this pattern is still playing out, and you can expect that pivot high to get taken out again if the sellers don't show up and take out this bar's lows. The low there being 52.64, being a significant level, because that's right at that quarterly open as well. You break below there, this is an inside bar. Guess what? That's more momentum to the downside. So that's what I'm watching for emerging markets, EM. Okay, let's go now to TSX, so the Canadian stock market. How are we doing there? TSX looking very strong, all-time highs, so a raging bull market there as well. Yeah, you know, maybe we are entering in or maybe we are already in a commodity super cycle, because right now the TSX is, you know, has been flying. Look at this. It's 1, 2, 3, 4, 5, 6 consecutive months of higher highs, just like, you know, we're seeing on the US indices. So higher highs there. And we're getting close to doing that Bollinger Band walk, right? So when we get another week here above there, we're back in Bollinger Band walk territory, and TSX at this point could very well do that, because on Friday we closed it with a outside inside. All right, so outside inside. If you break to the upside here, the question is, does the breakout sustain itself and go higher, or do they sell it and we pull back in here again? That's what I'll be watching for. The bias goes to the upside. I'm not recommending people short this thing. You know, this there's a lot of headwinds that are working. A lot of tailwinds that are working for the TSX right now, from a macro condition, with the strength in oil and just the strength of commodities and resources right now. The TSX is poised to do even more gains. Let's go now to a TLT. And TLT, the selling in TLT anyways, has definitely taken a break. It's a bit of a breather, but it hasn't really done much yet so far. But this is exactly what the equities markets needed, because, you know, when we had that sharp sell-off in bonds, that forced people to reprice a lot of things, specifically tech stocks. This, of course, you know, you could argue was the perhaps one of the catalysts, maybe one of the triggers that caused the Archegos fund to blow up, as people were deleveraging out of certain names, and that may have caused a cascade of events to cause that, to force selling in Archegos. But anyways, right now TLT, as I mentioned in last week's video, maybe 2 weeks videos ago, when I said all eyes on bonds, the issue was always going to be this: it's inside month right now, and, you know, we had a huge month here for bonds relatively in March. How does it get out of that range? I don't think it can. We still have a lot of time left. 19 trading days left for March. For April. But yeah, look how far the ends are, right? The ranges, that top end, that low end, it would take a lot to break out of that range. So I think we're gonna probably see an inside month for TLT here, because you can just see the action itself is very, very muted, and it's very sideways. This is all consolidation. We may have already found the bottom here, at least a short-term bottom, because we broke above last week's highs. That's what I was looking for this past week. So that was conducive for the equities market, and, you know, we got that higher high now. So now the question is, do we continue to see these higher lows, right? That's what you want to see. Do you get those higher lows? And it looks like this quarterly open, that monthly open, is holding. So that's what I'm watching for. Is, do you continue to get higher lows, or do we break below this past week's trading range, that low there? And if it does break below there, that's back to full time frame line of the downside. That would be significant. So that's what I'm looking for bonds right now, is, do you break below that low there? That could definitely cause more selling to the downside. For now, so long as bonds keep moving, drifting higher somewhere in this range, if it continues to do this sideways action like this, that's probably going to be good for equities. And we could see that, you know, for the rest of the month. As you see the yellow ranges, that's the prior month's high, that's the prior month's low. And so long as you stay inside that channel, that's inside month action. So far, look at the 2-week chart, just to make it very clear, inside bar on the 2-week chart. That's just consolidation. That's what it is. Again, and that's you know, that would be productive for bonds. But again, you know, my higher time frame view on bonds is that I would not be surprised to see that 2% yield show up on bonds, because right now we look at that quarterly chart. That's why I don't think it's going anywhere, right? It's basically sitting inside bar there. If we look at the IEF chart, the 7-10 year ETF, you can see there, right? Same thing. It's going to be really, really hard to take out that, to go to the upside. Look at that range in the last quarter. It would be, you know, significant, and I don't think it's going to happen. More than, you know, this is possibly that we just sit here for another quarter inside this range. It more than likely, you know, if it doesn't break to the downside, that it's going to sit in this range and be an inside quarter, right? Because I don't think an upside break is likely. A downside break is more likely, and that's what I think is going to ultimately play out. Is we're going to see a downside break that's going to take out that pivot low, because that's an inside bar reversal short to the downside. that low to get taken out, because remember the US 10-year, all right, we're looking at that 2% yield there. Okay, so right, that pivot high 1.972, somewhere in there. It's going to take a while to play out, so this is not a call for a 2% interest rate next week or even next month. But ultimately, if this thing can resolve to the upside, yeah, that pivot's going to be very, very likely, and we'll see people quickly talking about 2% interest rates. Okay, so let's talk about a few more items here. Let's talk gold now. MGC, let's go there. Gold, following real interest rates. That is now the narrative. If you understand that, you understand why gold is trading in such choppy ways and why it's not necessarily linked with Bitcoin. It's because gold is now trading off the real interest rates narrative. Again, if bonds gets 2%, if the real interest rates get to 2%, or the 10-year gets to 2%, stronger US dollar, not good for gold. So long as interest rates stay even, maybe they go down a bit, it's positive for gold, and that's why we saw gold rally for the past couple weeks. So green month so far on gold, up what does it say here on gold? Where are we? Up 1.7%. So yeah, up. The reason I say that is just I'm just thinking about the returns on Bitcoin, and I'm scratching my head wondering, well, if you're a trader, you have to wonder why even trading gold when you can be trading Bitcoin, which is so much easier to trade than the choppiness you see in gold here. But anyways, we do this, we do the analysis here because it's good to understand the relationship between these different assets. It gives us a stronger understanding of the flows of the market. So inside bar down, right? That's a big, look at that big shadow here on that inside bar reversal. We got that this past week. It took up that pivot high and that pivot high and that pivot high. Exactly what you want to see with an inside bar reversal. You take out all the shorts, right? And so now gold, this is what you've been looking for gold. Green quarter, green month, it was green week, so decent 0.95% on gold. So gold slowly playing its way out, and that's what we're looking for, right? We're looking for this thing to see how far it can go to the upside. The issue with gold though is that, see this big range, that red bar, that high red line there, that low red line there. You know what that is? Yes, if you've been watching these videos, then the red lines are my quarterly ranges. So it's this range right here. Okay, so you're sitting inside Q1's range. That's going to be very hard to get out of, right? Because look where we are trading in relation to the high end. So very, very likely, unless something remarkable happens with gold, we're going to sit inside quarter for gold. Okay, so that would not be surprising whatsoever. And then you'd have an inside bar, which then maybe next quarter sets up for an interesting inside bar reversal to the upside. That's one possibility, one scenario that could play out, not this quarter, but next quarter, right? Because of the chance of taking out that level, 1962.5. Ooh, that's really far away right now. So, I think gold needs to consolidate, maybe get a bigger green bar here, this quarter, and then maybe it sets up in Q3. But for now, right, you see the ranges, you see how far that is, right? This is a very small blip right now. This past week's trading. A lot of work to do in gold. Let's see if gold can continue to do its thing here, and that is just basically sit around and stay positive. It's just not going to be the big returning asset class it was a few years ago. Okay, so let's go now to, well, that's speaking of gold, let's just talk about digital gold, BTC. All right, so BTC, what can you say? This thing here, up until today, actually, this is Saturday as I'm recording this, was actually trading in a very muted way. It was actually trading sideways. We did get finally break a slight higher high, and we completed the inside bar reversal pattern. But this is what I'm watching for. As I mentioned earlier, I recorded a video for my BitClout followers. If you haven't checked out BitClout yet, go to bitclout.com and follow me there. But I've been trying to put up more content on that social media platform throughout the week to keep people, or at least to share what I'm looking at throughout the week and things that are top of mind for me during the trading week. So you'll find my stuff there. I'm not really active at all on Facebook. I post occasionally on Twitter, but I really like BitClout, so you'll find me more active there. But right now with Bitcoin, unlike Ethereum, it's still inside month. Okay, so even though it's a green month so far, there just hasn't been a lot of buying stepping in. You're still inside month. The all-time highs there are 61, 699. Right now, still trading inside month. How do you get out of there? seems to be consolidating here. Although, you know, it could easily break above that. So I'm not saying it's going to stay inside month on month, because it's very, very close to taking out that all-time high. On the weekly chart, it did it, right? So I added some Bitcoin here. I did the inside bar reversal to the upside. Added some earlier today as well. I still have a long core position from down here, even from down here. So, you know, just steadily holding and trading around those levels. And, you know, I got that inside bar reversal to the upside. It's just playing very slowly, right? So it's very, very tight stuff. And this is what I was pointing out. This bar, this bar, this bar, and that bar is all inside that bar. So overlap. Again, this is this, you know, once you can see this across asset classes, you can just understand price action. This is why the trading is the way it is because, you know, we're seeing consolidation, a contraction cycle in the markets where it's going cyclical versus expansionary. So as I've done a few times already, just look at that 2-week chart. It was up until today, it was trading inside the prior week's high, inside bar up. All right, so that's positive. You did take out that high. You've fallen back into the range again. Again, this is the level 61.99. That's the all-time high, and I think we're probably going to take it out. It's I think just a matter of time, but it's just very slow going right now. As Bitcoin, it's you know, it's not where all the money is rushing into. Funny enough, and you know, I'm long. I think I'm long 29 coins right now. So basically, I trade on Bitfinex, and I create a watch list. This is how I do it. I create a watch list of all the marginable coins on Bitfinex. So any coin you can trade on margin on Bitfinex, I track those. The reason why I like trading those margin coins is because I like to short them as well. So, you know, I'm not interested in just going long only. You know, as traders, we have the flexibility of going long and short. So in margin, you can short those things, which is fantastic when you're in a bear market. So I watch those 29 plus, actually more than 29 pairs. Yeah, something like 30 pairs now. But anyways, I think I'm long 29 of them, which is a lot of them, on different sizes and different entries and different time frames, but along a bunch of coins. And this past week, what we really saw was that we saw, interestingly enough, the altcoins from the last bull market cycle really pick up. So Bitcoin basically did nothing this week, up 3.27%, not much different from the SPY. What's the SPY again? The SPY was what? Up 2.72. So remarkably, Bitcoin only slightly outperformed the SPY. But guess where the money was going in the crypto space this past week? Yeah, like I said, it's those altcoins from the 2017 bull market run. So I was along a lot of these names. I think the big winner this past week was Ripple on some good fundamental news with their continued battle against the SEC. And what a beautiful setup that was. Look at the Ripple move. Outside bar, double inside, and look, Momo up now this week, up to the tune of 126%, 127 now as we speak. It's a beautiful move on Ripple, and this thing still has a bit of range to go still. This is what I've been saying. If you've been watching these videos for some time, I've been saying these altcoins have the room to come back to all-time highs. That's when you're still, maybe now we're not necessarily in the early innings anymore of the crypto bull market, but when we were trading down here, we were still in the early innings. So now we're maybe in the sixth inning or seventh inning now, but not in the early innings anymore. But still a lot of range to recoup on some of these crypto names. LTC, which I'm long as well, full disclosure, great pop this past week as well, up to the tune of, what are we up here, 25%. So we still are a little bit away from those all-time highs. There's just so many names that popped up this week, but one chart I want to show you. Let's do two more charts and I'll wrap things up because we're going a bit long. Let's just go back to that Bitcoin. Let's wrap with that one. Let's just quickly show that shit perp chart. I posted a screenshot of this earlier in the week on BitClout. But here, this is what I've been watching, right? It was doing a it was doing a Bollinger Band walk to the upside, right? So going into the week, I was simply watching this Bollinger Band walk, and as we've been doing with the rest of the equities markets, we're like, how far can Bollinger Band walks? Well, how far will it go on the Bollinger Band walk? And this past week, we had a break below the prior bar's low. Okay, so does that mean right away you go out and you short the thing and you expect it to break down? No, that's not what it means. It's you're watching and you're responding to price. It's not a reactive thing where it's A equals B, or you're trying to, just it's not that simplistic, right? What you're watching for is for price to first break below those levels, and then look for setups that confirm with time frame alignment. So in this case here, price quickly pops back up again. Yes, you could have tried taking a short there when it was trading below the quarterly monthly open, but your trade would have failed pretty quickly as the shit perp chart quickly fixed itself. Now you're gone outside bar here on the Bollinger Band. Okay, so this is going right in the highs here now. So this is what you need to watch for this coming week. This is significant. So this is now very significant because you have, again, one of three scenarios that could happen, and there's some variations on that, but I'll quickly explain it. Number one, the easiest one to understand is you go Momo up, right? If you go Momo up, that's a melt up, right? You go Momo up inside the Bollinger Bands, that's a melt up, and that would just mean more people are chasing. You go second scenario, outside bar, inside bar, consolidation. You could very well break outside the Bollinger Band walk, but it will then just consolidate through time. So when I redraw the ranges here, this coming week, if we just open here and sits sideways, it's a sideways consolidation, maybe creates an outside-inside pattern, and then maybe it breaks the following week. Third option is it goes outside bar and down. That's Momo down. All of a sudden the sellers show up, they break below this week's lows, which would be a big surprise because people try to defend it. If you stop those guys out, watch out, you can come lower through here, as that would now be Momo down with full time frame alignment. Okay, so those are the three simple scenarios. Now there's different variations where it could go Momo up and then pop back in the range again and go sideways. You could go Momo down and then pop back in the range again and go sideways, right? So that would be consolidation still. But the three simple scenarios are something I'll be watching for to transpire this coming week. Okay, so there's your shit perp, and let's wrap up. I'll go back to that Bitcoin chart one last time because I did put in a small prognostication in my video this past week. If you didn't see the video, you can just go on TradingView or go on BitClout to find that. And here's my prognostication. Okay, so last week I talked about the possibility of Bitcoin 100,000. That seems to be a bit conservative, given people now calling for 150,000, 200,000, 300,000. Whatever the number is. So on a pure price action basis, this is what I think is possible. This isn't just based on price action, nothing more, nothing less. But if you've seen price do its thing, you've seen it enough times, then you begin to believe what the charts are telling you. So what do we have here? Let me just quickly fix this chart here. There. So we have a big broadening formation that has been playing itself out. Now I drew this broadening formation a while back, so I'm going to just turn on the log chart again because then it gets a little easier to see. So I apologize how it looks a bit squeezed, but it's very hard to see just given the size of the bars. So I'll stick to log. So I drew this a while back. Higher high, lower high. That's your first anchor. Low, higher low, higher low. Okay. So you've seen the broad informations across all my charts, and so now we simply extrapolate that and extend it. If we get to the top end of that broad information, what price do we get? In here, this is a monthly chart. Let's assume we hit, if we get up here in the June time frame, that puts us around the 226 level. Depends on when you hit that, all these trend lines at the top end. You can get up to 260, you can get up to 275. So if you put that, it kind of puts things in perspective, right? So when you hear these calls of 200,000, 300,000, even though that seems really far away because we're only trading at 60,000 right now, it is, from a pure technical perspective and the understanding of broad information, that is certainly a possibility. I'm not going to assign a probability of this thing here because it's again, you never know if it's going to happen in a straight line or it takes years to play itself out. Maybe it comes down, pulls down, and comes back up again. That is something you can never predict. But yeah, these upper trend lines, I think it's very possible that one day we definitely come up these levels here, and who knows, that 200,000 to 200,000 level. Again, it may not be as far-fetched as it may seem. All right, so that being said, I've come to the end of this video. Hope you enjoyed it. As always, if you have any questions, feel free to find me at my blog at thetradingedge.org or leave a comment in the comment section on YouTube. You can also find me on bitclout.com. The handle there is Houston Trung. That's where you can find me. I'll post a link to my handle on this on the video page, as well as my blog site. And as always, I wish you happy trading, stay safe, and all the best.